Hello, everyone, and welcome to At Barrons. I'm Andy Serwer, and welcome to our guest, Morgan Housel, who's an author who writes about the markets and psychology, I guess is a good way to describe it. Morgan, nice to see you.
So nice to see you too, Andy. Thanks for having me.
So you're kind of a category of one, Morgan, I guess, because as I mentioned, you're an author and you kind of have a singular take on the markets, investing, and human behavior. You also work a little bit in venture and in the business world as well. How would you describe yourself?
I don't know if I try to do that other than, look, I would describe it as what I am not. I am not a financial advisor. I am not a journalist. I'm not a portfolio manager. It's kind of this catch-all of I'm someone who's very interested in investing, who likes to write, and I'm just trying to make sense of the world and figure it out. Why that's been helpful for me is because for two reasons. One, I think even the most well-meaning people who are a financial advisor or a portfolio manager are inevitably going to get sucked into the incentives of their own system. And even if they mean very well, they're good, honest people. If you are paid to think one thing, it's hard to think away from that thing. So that's one reason why being an outsider without any kind of institutional imperative, I think has been helpful. The other reason is that because I'm not tied into any one form of thinking. Sometimes I write about stock picking. Sometimes I write about the economy. Sometimes I write about World War II history and biology. And it's very all encompassing. And I think why that's been helpful is because investing is not the study of finance. It's a study of how people behave with money. So once you expand the horizons to just a catch-all of behavior, you can really start looking in some obscure places to figure out how people think and why they do what they do. And that's all that I'm trying to do as well.
All right, like I said, I very much think that's a category of one, Morgan. So I want to ask you about your best-selling book, The Psychology of Money, where basically, I guess you say that human behavior is more helpful in understanding the markets than, say, business school classes. Is that sort of the gist of the book, and how is that really helpful to investors?
I think that is the gist because, look, it's nothing against business school. You can learn a lot. There's some great institutions, but where people make financial decisions is not on a spreadsheet or on a PowerPoint presentation. People make financial decisions at the dinner table when all their family dynamics and like all those influences are coming into play. They make them in a corporate boardroom where there's like a power struggle and personality struggles. So I think generally finance is taught. It tends to be taught as like a math-based topic where it's just, here are the formulas, here's the data, put the data into the formula and it tells you what to do. I'm generalizing, but that tends to be how it's taught. And I just think in the real world, it's not only not that, it could not be further away from that, where people make like how they invest and their decision to invest is emotional. It is social. It has a social aspiration component. If you're a professional investor, you need to influence your clients' thoughts of you. And there's a marketing component to it. And so it's just a very different category than I think how it's taught. And I think if you spend your time studying behavior and how people think about greed and fear and risk and opportunity, I think you can do better off, whether you're a professional or an amateur, relative to the person who is spending all their day in spreadsheets. Now, there's a lot to learn from spreadsheets and data and facts. It's not to poo-poo that, but I think there is just a layer of behavior that sits above it to where if you understand all of the facts and the data, but you can't control your behavior, none of it matters. And there's a flip side to that, which is the person who has good control over their behavior, but doesn't really know any of the facts. They don't have any financial education. They never went to business school. They're a country bumpkin who just kind of saves some money and invests, but they have a good sense of their greed and fear. They can take a long-term mindset. That person can do incredibly well, even if they don't know any of the technical attributes of investing. And it's one of the very few fields where that exists. Like there's no world in which an amateur can outperform a Harvard-trained cardiologist at open heart surgery. Like that world will never exist. You have to be a technical expert to do it. But in investing, you have these situations where the country bumpkin does very well and the hedge fund manager blows up at the exact same time. And that's a very unique thing. And it's because behavior plays such a grand influence in investing and sits above all the technical skills.
Right, and I guess that could be both encouraging or discouraging depending on how you look at it. I want to ask you about another book that you've written, which is called Same as Ever. And there you talk about things that don't change. I'm wondering why that's useful and what those things are.
Yeah, I think it's useful. Some of this came from my frustration, maybe as a market observer and as a writer of, this is very well known, our inability across the whole industry to predict the next recession, the next bear market, the next technology. It's extremely difficult, if not impossible, to do it, at least to do it consistently, to predict what's going to happen next. And so there are two things you can do with that observation. You become even more of a cynic and just say, nobody knows anything about the future, don't even try. Or you can take a step back and say, look, there's a lot that we don't know, but there is a category of things that we do know. And if you're a student of history and you look back, you'll realize that the way that people respond to greed, fear, uncertainty, new technology, volatility, it's the same today as it was 100 years ago, as it was 500 years ago. And because of that, you can accurately say it's going to be the same 100 years from now. Like that part of human behavior just doesn't change. So then you can say, okay, rather than trying to predict the next recession, which I don't think anybody can do, let's spend our time focusing on how people respond to recessions, their behaviors around it, how they think about loss and volatility. And then whenever the next recession comes, I have no idea what's going to cause it or when it's going to come, but I know exactly how people will respond to it because that has always been the case. I think if you do that, you have a much more accurate view of what's going to happen in the future. If you take the humble view of saying, I don't know what's going to change, but I know how people are going to respond to change whenever it comes.
Right, right. Hey, do you have any other books in the works right now? I know you write blogs, and we'll get to that in a second, but what about our other books?
I have a book coming out this fall, the fall of 2025. It's called The Art of Spending Money. And my first book, The Psychology of Money, was really about how to acquire wealth through investing and saving and whatnot and compound interest. And this book is really about what to do with that wealth. And just like my first book, it doesn't tell you what to do because everybody is different. Psychology of Money doesn't tell you how to invest, it just tells you what happens in your head when people tend to invest. And The Art of Spending Money, I don't tell you how to spend your money because everybody's different. What works for me might not work for you. And if I could tell you, I would have called it the science of spending money, but art is different and it's unique. And so the book dives deep into envy, jealousy, social aspiration, keeping up with the Joneses, those kind of topics without telling you exactly how to do it. It's more about the psychology of spending money.
Ooh, that sounds good. Okay, maybe we'll have to have you back on in the fall. I'm wondering, switching gears here a little bit, if you have a take on the stock market, and if so, what it is right now.
I have lots of takes. Here's one thing that might be a little bit different. I follow the stock market very closely. I check it all day, every day. I check the futures. I'm very aware of what's going on an hour by hour basis, but it never influences the decisions that I make as an investor. I dollar cost average into index funds that I hope to own for the next 50 years. And I don't think that's an irony or a contradiction because I think markets are a window into human behavior that are so fascinating. I love witnessing how people respond to news and greed and fear. It's this amazing window into humanity, I think. But as an investor, I just want to hold on tight for as long as I can. And the game that I'm playing is like, if I can be merely average as an index fund investor for an above average period of time, that I will probably end up in the top 5% of investors without trying and without virtually paying any fees to do it. I can spend the rest of my time hanging out with my kids and writing books and things like that. So I think that's my take on the stock market. One thing that's important is that just because I invest like that doesn't mean I think others necessarily should either. Like it works for me, but I know a lot of my very smart friends could not look themselves in the mirror if they were investing like that. It doesn't fit their personality. And so I think the idea that there are many different ways to skin a cat and there are many different ways to invest, most financial debates, when people are arguing like, oh, you should invest like this, no, you should buy this stock, you should do that, they're not actually debating each other. It's people with different risk tolerances, different skill sets, different ambitions who are just talking over each other. That's the majority of market commentary, are different people talking over each other. And so I just want to be a long-term owner of capitalism and benefit from that. And rather than trying to guess what the stock market's going to do next, just be a beneficiary of compounding over the next 50 years. That's really all that I try to do. Now, if you were to pin me in a corner and say, what do I think about the stock market today at these valuations? Look, things have been extremely good for a very long period of time. And if you put that against any historical narrative, you could say, look, it makes sense to not expect over the next 20 years what we've achieved over the last 20 years. That makes a lot of sense. I would believe in that. I would also remind people that what I just said would have made perfect sense in 2012 and 2013. If you and I were sitting here in 2013 and I said, don't expect going forward what's happened over the last 5 years, it would have made perfect sense. And a lot of smart people said that. So just because you can look at valuations and come up with some sort of take on it does not mean you have any clue whatsoever exactly when that's going to play out.
Hey, Morgan, what are some of the common mistakes that investors make? You sort of alluded to some of those, I think, when you were just talking now, but what are some?
I think two big ones. I think most financial mistakes are when people make a decision that is good advice for somebody else, but not for them. And that's a very difficult mistake to make, because it's hard to recognize that that was a mistake, because you're following good advice that was given to you by a wise and well-meaning person. But for a lot of people, they go to their financial advisor and they say, look, long-term investing is great. You should be 80% in stocks or whatever it might be. And that is good advice maybe for you and not for me, or whatever it might be. And so the biggest mistake that people make is not being introspective enough about who they or their family, their spouse is and wants to be, and what their actual risk tolerance is and what they're willing to put up with. I use this interesting example of my parents are, in their 70s and retired, and they have a more aggressive asset allocation than I do. And I am not in my 70s and retired. And look, it makes sense for them. Look, I would say on a spreadsheet from a financial advisor, that makes no sense. That a retiree is taking more risks than someone who is still in their prime working years. That makes no sense. But if you understand their personality and my personality, it totally makes sense. They know what they're doing. I know what I'm doing. I hope, at least. And it makes sense for that. So I think you need to be a little bit more introspective about who you are and what you're trying to do, and not chase somebody else's dream.
I love it. Meet our unradical son, Morgan. Right?
that's exactly it.
Go ahead. I interrupted you.
I think the other is viewing market volatility as an indication that somebody did something wrong, that either a politician did something wrong, the Fed did something wrong, businesses did something wrong, versus what it actually is 99% of the time, which is the cost of admission for doing well over time. The whole reason that the stock market does well over time is specifically because it is volatile and uncertain in the short term. That's the ticket fee at the gate that you have to be willing to pay. And if there was no volatility, there would be no return. There'd be no opportunity. And so when you experience volatility, if you have that mindset, you stop saying what went wrong and who should I blame, and you start saying, this is the price that I need to be willing to pay to do well over time. It's so simple, it's so basic, but it's so easy to overlook, even among the smartest investors out there.
You work for a venture fund called Collaborative Fund. What do they do? What do you do there?
What do I do there is primarily writing. I'm really not involved in the investing process whatsoever. It's a great group of people whose philosophies I enjoy, that I like having it be a home for my blog, but I'm not involved in the actual investing process. I've always have been, and always I think will be, a writer, getting back to my opening statement that I'm not a financial advisor or portfolio manager. And so it's been great as a home for my writing over the years.
The blog at the Collaborative Fund, your most recent one, is about independence, which I thought was fascinating. Can you talk a little bit about that, why that's important, and what we can learn from understanding that?
I think financial independence is the most reasonable goal for most people. That if you have an incentive to accumulate wealth over time, that by and large, it's not so you can have a bigger house or a faster car, even though I like both of those things. It's so that you can have independence. That is because we all know that you're going to get used to and accustomed to the fancy toys over time. It's not to say there's no value to them, but they're going to give you a short jolt of dopamine, and then you're going to get over it. But waking up every morning and saying, I can do whatever I want today with whomever I want for as long as I want. I can work where I want and when I want. I can retire when I want. That is a lifestyle boost that you will never become accustomed to. It will always feel great. And maybe what's even more true is that it's opposite, which is that you are beholden to somebody else's goal or somebody else's priorities. That is a decrease in most people's mental well-being that is very hard to get over as well. So to the extent that you can use wealth for independence, I think it is the highest ROI that any money pays over time. And that's all I've ever wanted out of money. Of course, I like a nice lifestyle. I want to take care of my family and whatnot, but mainly what I want money for is every dollar of savings is a piece of my future that I own and somebody else does not. And look, I'm not a hardcore libertarian either. But for financial independence, I think it's so overlooked that is what money can give you. It's true for businesses that might be beholden to other shareholders that have different priorities and whatnot. It's true for individuals who might want to quit their job and work somewhere else or live somewhere else. If you can use your money for independence, that's as good as it gets.
Right. And I think one thing that you're saying is not only is it important, Morgan, but also the point that most people don't even realize the degree to how important it is.
What's very interesting are when you meet people who have a high net worth and maybe they think they're financially independent, but they're absolutely not. They're completely beholden to their boss, to their shareholders, whoever it might be. Like just because you have a high net worth and just because you have enough money to pay all your bills indefinitely does not mean you're independent. So independence goes so far beyond just financial independence. It's the ability to think the way that you want to. It's moral independence, cultural independence, just the ability to live life in your own way is, I think, one of the highest areas that you can reach in life. And of course, that's a much broader, like philosophical topic, but so much of independence is financial, that the reason a lot of people believe what they believe and say what they say is because they have a financial incentive to say that. And so once you have financial independence, it just opens up so many doors to a more fulfilling life.
And you mentioned that you write about, or you write on a wide variety of topics. Looking at what you're writing about and have written about, where do you get these ideas from, Morgan?
I like to read as broadly as I can. The philosophy for reading is start with a very wide funnel and then have a tight filter. So I will start reading any book or any blog post or whatever it might be that even looks remotely interesting about any topic in science, in history, in culture, whatever it might be, but then a very tight filter to where if it's not working for me, I'm going to shut the book very quickly and move on to the next one. And I think when you cast that wide of a net and you're reading about finance, yes, but also history and philosophy and science and politics, like whatever it might be, you start to connect the dots and you realize how broad behavior is. And if you're someone like me and you're trying to look for all these ideas, you will see that when you're reading about the Civil War, you'll learn a lesson from reading that about psychology and behavior that applies perfectly to the stock market in 2025, that kind of thing. Because you realize that like what so many fields are is a study of how people are responding to greed, fear, scarcity, uncertainty. That is what military history is. It's what a lot of biology is. It's what a lot of evolution is. And it's also what investing is as well. So once you start connecting those dots between fields, you see them everywhere, and it's fun to do.
I want to get back to that reading in a second, but first I have to ask you about Markel. You're on the board of directors of that company. It seems to be kind of a holding company with different businesses, a la Berkshire Hathaway a little bit. Is that accurate? And what do you admire about that company?
Yeah, I had been a shareholder and a deep admirer of Markel many years before I joined the board of directors. It's really an amazing company. You really described it well. It's been very oft described as a miniature Berkshire Hathaway in the sense that it is a very well-run global insurance company that invests part of that float and part of those profits into businesses, stocks and wholly owned businesses. Now, many people for decades have looked at Berkshire Hathaway and said, we should try to replicate that. We should try to do that. It makes so much sense. Have an insurance company, invest the float, invest the profits into businesses, hold them for the long term. It makes a lot of sense. It's very difficult to do in practice because it's not a technical skill, it's a cultural skill. And I had seen this and been a shareholder of this many years before I joined the board, that the philosophies and the culture that Tom Gaynor and the Markel family have instituted over the years are as close as it's come to actually replicating that Berkshire model. To do it over time. It's an amazing place, and it's been fun to be on the board and get to see it up close and personal.
Right, and it's a publicly traded company for people watching if they're interested. Final question, Morgan, going back to reading. What are some of your favorite books and/or what are you reading right now?
What am I reading right now? I've tried to get into science fiction, which I've tried unsuccessfully over the years. I've traditionally mostly read nonfiction, but I've heard people talk how much science fiction has changed their life. And I'm like, I want some of that. So there's a book called The Unincorporated Man, which I'll give you a 5-second definition or a summary of it. It's basically a guy who was cryogenically frozen in the 1980s, and he is awoken. He is brought back to life 300 years in the future. And the book is about his experience with new technology 300 years in the future. And there's many angles of it, but it's absolutely fascinating. I read a book very recently by Eric Larson, who is one of the best U.S. history writers. It's a book on the Civil War that is absolutely fascinating. And I love books when the author takes a topic that is very well known, like the Civil War, and gives you an angle on it and tells a story about it that is completely different. and that you haven't heard before. And so much of good communicating and good writing is just storytelling. And you don't have to reinvent the wheel and say something nobody's ever said. You just have to say it in a way that draws your attention in a way that you haven't seen before.
All right, writer Morgan Housel, thank you so much for joining us. This is at Barrons. I'm Andy Serwer. We'll check you next time.